My name is Kerry Stevenson, and today I'm speaking with the CEO of Miles Franklin. His name is Andy Schectman. Now, I recently, for most of you would know, I went to the Rick Rule Symposium in Florida. Now, I've known Andy for a number of years, but Andy was at the Rick Rule Symposium in Florida, and he gave a keynote speech. And I was completely mesmerized by what he was saying. Been trying to get Andy ever since. He's got very popular because his views are something that I think everybody out there, all of you watching this, please get rid of your distractions, sit down and pay attention. Andy also got the Best Speaker Award. I know he doesn't like me talking about that, but I'm going to say it anyway. He got the Best Speaker Award because it was such a powerful presentation, so important. And they've been in business, Miles Franklin, for over 30 years, selling precious metals all over the world. Andy, thanks so much for joining me today. And it's great to see you. As I said just in that introduction, blew me away at Rule Symposium. And I really think it's so important that right now, as we're sitting in inflationary times with the gold and the silver price not doing a lot, in fact, in other currencies doing okay, but with US dollar, not so well. But I want to find out why people don't truly grasp what's going on right now with precious metals, with inflation, with central banks. Over to you. I'm going to shut up.
Good to see you, Kerry. I appreciate the kind words, and it's always good to see you. Better to see you in person, and but this is nice also. I appreciate the invite. You know, I think it's hard to blame people, Kerry, for feeling the way that they do. Most people, you know, have lived through nothing but prosperity and good times where, you know, we've had bumps in the road, but there has been, you know, nothing but prosperity, about opportunity. And, you know, most people don't understand that a lot of that over the last 12 years is illusionary. I mean, I think that it's important to understand that when we look at what's happened over the last 12 years, where, you know, brokers would say, well, if you just left your money in stocks, you would have been better after '08. You didn't need to sell. You could have hung on and you would have been better. And that's true. I mean, the stock market went on an epic run, but in 2008, the Federal Reserve's balance sheet was 800 billion, and today it's just under 9 trillion.
Wow.
And all of the money that the Federal Reserve has spent has been in interest rate sensitive assets like mortgage-backed securities and US Treasuries, which has suppressed interest rates and has created an illusion of prosperity. That low interest rates and easy money has created distortions in and misallocations of capital and distortions in prices, where price discovery is very, very difficult. Easier said. In the last 3 years, the United States printed more money than they did in the history of the United States prior to it. And this has created massive distortions where hedge funds can borrow money at next to nothing and plow it into cryptocurrencies and stocks and bonds and real estate and jack these prices up to all-time highs. And what has happened is you have asset prices at all-time highs inversely correlated to one thing, and that is a rise in interest rates. Now, the question becomes, what triggers that moment? How do rates rise? Does the Fed raise rates enough to engineer a soft landing? Not too much to break everything, but just enough. And the answer is no, that's pretty much an impossibility. So the question is, what happens? And that's what I've been talking about, a progression of events that I'm certainly happy to take you down that path if you'd like me to.
I think it's important that we do go down that path, Andy, because as I say, that progression of events, people aren't putting the dots to joining the dots, if you like. And I'd love it if you could take us down that path. Some people would say down the rabbit hole, but let's go down that path, because I think it's important to set the scene for that better understanding, if you like.
Yeah. So with what I just said, I'd like to make a premise before I take you down the path. And that premise is that the Federal Reserve will not raise rates high enough to stop inflation. And before I take you down the path, let's just discuss that for 1 minute. In 1980, with inflation at 16%, the then Fed chairman, Paul Volcker, raised interest rates to 19.75%. Now that killed inflation and also killed the economy. It was a much different world back then, of course.
Yeah.
We didn't have this massive debt. In fact, we were probably creditors, I guess, back then, but we're not even reminiscent in terms of where we are. But suffice it to say, getting tough on inflation means raising the level of interest rates above the level of inflation. Even if you realize that since 1980, the government has changed the metrics by which they measure inflation, stripping out things like food, energy, and housing to subdue the price of inflation, because it's the object of every country and every government to print as much money as they can while keeping inflation in check. And the way they do that is by fudging the numbers, so to speak. Well, in any case, I don't believe that Fed Chairman Powell wants to be written about in history books. And if they raise rates high enough, they will blow up everything. And I think they won't do that. And maybe some of the things that have happened that we'll talk about are intended. Maybe they're not. You have to wonder, after I finish this progression, were these events, or some of them here over the last year or two, were they intended? And that intention is to find a scapegoat, to create the Great Reset. Now, that Great Reset that Klaus Schwab talked about in 2019, when he talked about it, I thought he was an idiot. I mean, come on, how the hell are you going to do that? But the more things have unfolded and the more I think about it, it's not so idiotic. And I'm going to try to show you what this progression of events is leading up to. So we'll go back to 2017. We'll start this ride to where we are today. And in 2017, it was an unusual time, Carrie, because the precious metals had gone from an all-time high in 2011 with $50 silver and $1,920 or $30 gold, and it had gone down for 6 years to 2017. And at that point, central banks were selling gold, and cryptocurrencies were taking off, and equity markets were doing well. And it was a rough time to own a precious metals business. And I, there were days I didn't want to come into work. So,
really? Wow.
Yeah, it was 6 out of 10 orders that we placed in 2017 were sell orders. People were selling and going into Bitcoin and just capitulating.
Yeah.
So all of a sudden in 2017, we see the German Bundesbank make a very big stink about repatriating their gold. Now they had talked about it for a few years earlier and nothing really happened. Now they make a big stink in the media. We want all our gold back from the New York Fed. And it was unusual that in the midst of a 6-year bear market, a central bank, the Bundesbank, is publicly demanding their gold be sent back from the New York Fed. Within a few months of that happening, the Bank of Austria, the Bank of Hungary, the Bank of Turkey, the Bank of Poland, the Czech National Bank, all of these banks said the exact same thing, not only to the New York Fed, but also to the Bank of England: send us our gold back. And I'm starting to,
But sorry to interrupt you there, Andy.
Yeah.
What was it that triggered them wanting their gold back? Why then?
Oh, yeah, I'm going to tell you, and I'm going to tell you in 2 years. But my inclination is that they were told, get your gold back because in 2 years, something's going to happen. So in 2018, after all of these banks being net sellers for years, these exact same banks that pulled all their gold back, as a group, they bought more gold than they did in the 60 years previously combined. So now you see massive repatriation and massive accumulation. And now it's got my attention. And I'm at the time, the Sprott Show, showing charts of this, showing how gold is being suppressed at the AM and the PM fix, talking about manipulation and the central banks accumulating gold. But the real story starts 2019. And this is when everything, the doors or the windows or the sky parted, the seas parted, the clouds parted, everything just started to click for me when in 2019, those same banks who as a group bought more gold together than they did in the previous 60 years combined. In 2019, those numbers were up almost 100%. Now they're massively accumulating gold. They're repatriating it, removing counterparty risk. And then the first biggest event of my career happens. And that is, and before I tell you what that is, at Rick's show, one of the things I said during the show, I said, I'm going to tell you about 3 or 4 very big events in my career. And ask yourself, have you heard about it? Now, people in our industry may have, but the people watching this may not have. And ask yourself why. Why? Why haven't you heard about it? Because these are very big, important things. And I think people need to ask themselves, is this just breadcrumbs so that they can say we told you so? Or is it just complete ineptitude and misdirection by our leaders and our media? Anyways, 2019, after all of this gold accumulation by the Central Eastern European central banks and repatriation from the New York Fed and the Bank of England, who has been holding everyone's gold since the end of World War II, the Bank of International Settlements, which is the central banker's central bank, the most powerful and influential bank in the world in Basel, Switzerland, said to the world, gold is now a tier 1 reserve asset. Since the end of World War II, there had only been one, and that's US dollars and treasuries. By central bank standards, it is a riskless asset. So the most powerful bank in the world just told everyone that gold is the only other tier 1 reserve asset in the world other than US dollars and treasuries. It makes a little bit more sense when you think about, hey, maybe someone whispered in these countries' ears, hey, get your stuff back. Gold is now tier 1 or is gonna be, start buying it before everyone catches on.
Let me just, stop you for a second there. What was it before? Was it a tier 3?
Tier 3, which means
what's the difference?
Yeah, and so this is why the central banks would typically sell gold, especially the new kids who take over for the gray hairs, where gold had been viewed as wealth and money to the gray hairs. The new kids look at it as an archaic relic that pays no interest and costs money to store. And because it was tier 3, only 50% was calculated on the balance sheet, which would denigrate the ability to sell bonds and do business. So they said, what the hell do we want this for? Let's just sell it. And I think that's why it was pushed as a tier 3. It incentivized countries to sell gold and buy our treasuries. And so if you sell the gold and at this point in history, gold had been off the radar for a very long time. And so these countries would say, hey, let's sell the gold. It's earning nothing but dust. We're paying storage fees. Our balance sheet is hurt by it. We can buy US treasuries, make a return on our investment. The money's guaranteed by the US government. Our balance sheet is whole. Again, we have no storage costs. So yeah, it incentivized them to do that. So now out of nowhere, and the question is why? Why gold? A lot of people in our industry thought it would be SDR, special drawing rights from the International Monetary Fund, but no, it's gold. This archaic relic that no one has wanted for a very long time is now the world's only tier 1 reserve asset. So 2020 comes along, the banks are really accumulating gold. And I see something now that is really piquing my interest. And I have wondered for a very long time why very few people have talked about this. And I looked at it as the second biggest event of my career, and that is the Chinese Belt Road and Rail Initiative. And this is something, to this day, I can't understand why more people are not screaming about the Belt Road Initiative. It is the largest infrastructure project in human history. It is connecting Asia and Africa, parts of Europe, South America. It is connecting not only by railways and bridges and maritime channels and roads. It will only be patrolled by military and commerce. It's the Panama Canal on steroids. But all of this connection will be digitally, also boosting the need for silver in a digital world. But this deal is, when you put it all together, comprises pretty dang close to 70% of human population and over 40% of global GDP, even before industrialization. And the United States is completely ambiguously not part of it at all. And what's interesting about this deal, and we'll talk more about it in a few minutes, is that the contracts that are being settled on the Belt Road Initiative are all being settled on the new Chinese digital yuan. And we'll
Wow.
get to the significance of that in a moment. I will call these trades a beta test. We'll get back to that in a minute. So 2020, kicks off with a bang. You got the Belt Road Initiative really starting to hum along now, which it's underway, and it was underway then. It was underway a couple of years earlier, but now it's really starting to take shape. You got the IMF that comes out in 2020 and says, we want the new Bretton Woods. Well, the dollar was anointed world reserve currency at Bretton Woods at the end of World War II in 1944. So the IMF says, we want a new Bretton Woods. That's 195 countries from around the world who now say, we want a new system. Well, that got my interest. And then we see the rise of something that was very unusual. And on the COMEX market, I don't want to go too far down this rabbit hole, but the COMEX market is the price setting commodity exchange of the world. And contracts on the COMEX rarely stand for delivery, but you are able to stand for delivery. And, when oil went to negative $40, as an example, nobody wanted to take delivery, but they had to. So they had to basically be paid to take delivery. So in any case, it is an option. Delivery is an option. So in 2020, in the years past, all the years that I've watched the COMEX market, every week they publish a report, and it's called the Commitment of Traders Report. The Commitment of Traders Report shows the positioning of the biggest traders in the world and on the exchange, and it's always two groups. It's the commercial banks and the speculators, called the specs, the hedge funds. And as one goes long, the other goes short, and vice versa. But in 2020, out of nowhere, we see a third group of reportables pop up onto the Commitment of Traders Report, and they call them the others. And these are thought to be sovereign wealth funds and family offices, much like the central banks have been doing. And you wonder, are sovereign wealth funds central bankers wearing a different ball cap? Because all of a sudden, we start to see withdrawals off the COMEX market that has continued to this day. But these withdrawals, as an example, in 2020, we saw more gold taken off the exchange in 1 year than the Bank of Japan has in their official holdings. We saw as much silver withdrawn, actually physically taken off, bye-bye, we don't know where it went, than we have ever seen in a decade. So you have all of a sudden huge private money doing the exact same thing that the central banks are doing. They are accumulating and they are removing counterparty risk. They are pulling things off. So now things are starting to fit a little tighter together. We've got all of these things that are happening, but none of it really starts to really come together until 2021. 2021, we see all of these deals taking place. We see countries that are doing unilateral and bilateral agreements all over the place. We're seeing massive gold accumulation. Russia, Turkey, India, Poland, China, Kazakhstan, Hungary, Thailand, Japan, Brazil. They're all accumulating gold. And now I'm really starting to watch this because they're all accumulating gold. They're all striking deals. And these deals that used to settle in dollars are now unilaterally settling in each other's local currencies.
Wow.
They're all accumulating gold, which is a tier one asset. The International Bank, the IMF says we want a new system. Gold's now tier one. All the central banks are accumulating. You're starting to see there's some stuff going on here. And then it gets nuts. And that would be the day we left Afghanistan. Now, before I tell you about the day we left Afghanistan, and as an American, patriotism is in our blood. At least it is still in mine, and I hope it is in younger generations. When I started in this industry, I talked to people who were much older than me, the World War II vets, and their word was their bond, and they loved their country. And the thought of leaving servicemen and women, Americans, behind hostile enemy lines is something that would have been unimaginable in the country I grew up in. And so before I tell you what happened as a result of leaving Americans behind, leaving our Afghan allies who helped us behind with their biometrics handed to the Taliban, with people hanging from the wings of a transport plane. Before I talk about what happened, I ask people all the time, what makes the dollar the world reserve currency? No one ever knows. Very few people really ever know. But for the sake of where I'm going with this, what makes the dollar the world reserve currency is the protection of the Saudi kingdom.
Absolutely.
See, gold used to back the US dollar until 1971. And towards the end of the Vietnam War, President de Gaulle from France realized that we were printing more money than we had gold backing the dollar. From the end of World War II to 1971, countries could exchange their dollars back to the US for gold at a fixed rate of $35 an ounce. And that was our way of creating a gold-backed currency, creating a tether, if you will, to the value of the dollar. So we can't print more than we have gold behind it. Now, it was illegal to hold gold for people at this point, but countries, governments could exchange their dollars for gold at 35 bucks. Well, de Gaulle said, you're printing more. And he sent warships over to New York Harbor filled with dollars and said, give us our gold. We did. Bled down half the gold at the US Treasury, and Nixon closed the gold window. Boom, went back on our promise in August of 1971 to the world. So at that point, after 1971, the dollar's backed by nothing. But 3 years later, Henry Kissinger flew to Saudi Arabia and said to the Saudis, we will protect you. We've got your back. No one will ever F with you, ever. We got you, and we're going to give you military support. We're going to put missiles on your border to knock down any missiles coming. We're going to take care of you. And it's been that way since 1974, with the one stipulation that for that protection, you and OPEC are going to value oil globally in US dollars. And this is the rise of the petrodollar. And it's created a synthetic demand for the dollar where every country on the planet has had to own dollars to buy oil. So this is why the dollar is a world reserve currency. So now I move forward. Here's the third biggest event. The first was gold as a tier one. The second is the Belt Road Initiative. And the third is what happened the day we left Afghanistan. And I think there is no coincidence to the timing of this announcement. Russia announces a joint military cooperation agreement with Saudi Arabia. Now, Russia wasn't at war with Ukraine at this point. It's certainly not a hot war. Russia is a country with hypersonic ICBMs. In fact, 3 days later, there was an article in Zero Hedge saying Russia has hypersonic missiles that go, up into the stratosphere and travel at Mach 10 and hit the ground at the speed of an asteroid. And they said the State Department said we're concerned about this. We don't have that technology. Russia announces a joint military cooperation agreement with Saudi Arabia, and the next day with Nigeria, another OPEC producing country. And so you now have a nuclear weapon superpower, at least in terms of a military, if that's what you call a superpower, the ability to annihilate everyone on the planet with ICBMs, protecting Saudi Arabia. It used to just be us, not anymore. Now it's Saudi Arabia and Nigeria. And this is a big deal. Now, did I mention, by the way, probably not, that every one of the 13 OPEC producing countries are on the Belt Road Initiative, including the ones in South America.
You did not mention that.
Every one of the 13 OPEC countries are on the Belt Road Initiative, and now Saudi Arabia is being protected by Russia, and Russia is also protecting Nigeria. Now things are really starting to get nuts at this point. And then mile marker number 4, 2022. Here again, in 2021, leading up to 2022, we continue to see all of these deals being struck that usurp the dollar. But 2022 comes around, and now things really get nuts. And that is, we see Russia get kicked out of SWIFT. Now, at the beginning of the conversation, I said, remember, is this intended or not intended? My premise was that Volcker doesn't want to be written about in history books. So how about find a villain? So you kick Russia out of SWIFT, and you freeze their assets, and you sanction them, and you push them right into the open arms of the Chinese and their CIPS system, the cross interbank payment system, which mirrors the SWIFT. And you are seeing 85% of the world still trading with Russia when we are sanctioning them. Our sanctions don't do anything. So this is a big deal because now you have everyone in the world, including Saudi Arabia, including China, saying, are we next? Are they going to come after us for going after Taiwan? Are we going to be sanctioned because we're now being protected by Russia? I mean, are things going to start to get funky? Well, what's very important to understand is that behind the scenes, I think what that did was coalesce the BRICS nations. And when we talk about the BRICS nations, we have Brazil, Russia, China, India, South Africa. And these are the countries that produce most of the world's commodities.
Well, actually, I was just going to stop you there for a second, because when people talk about BRICS, and I heard you talk about it, why South Africa? You know, I understand Brazil, Russia, India, China, but every time you say South Africa, I'm like, why? And why did those countries make up BRICS? I'm just curious.
Well, that was the alliance, but more importantly, why do you think China is spending all this money to industrialize it? They are going over there, and this is a country that is incredibly rich in natural resources, in gold, in oil, in all coal, all sorts of natural resources. You know, I mean, the continent is filled with resources and has really never been industrialized. So China is spending all of this money building roads and bridges and airports and spending money to harvest all of the natural resources, to have, you know, where the oil is and the gold is and all of the things that you would need, not financial assets, but hard assets, commodities. So you have this coalition of countries in and of themselves that are pretty darn close to 80% or more of human population. So now you start to see some very interesting things happen over the last several months, and other countries wanting to join the BRICS nations.
Right.
We've seen Mexico say they want to join Mexico. We've seen Egypt say they want to join. We've seen Turkey say they want to join. And do you know who's been the largest accumulator of gold for the first 8 months of this year? Turkey. So the more gold than any country on the planet, they are joining the BRICS nations. Iran, Venezuela, Argentina. The list of countries goes on and on and on, and they all want to join BRICS. But guess who else said they are going to join BRICS? Just about a week ago, it was confirmed in South Africa in a meeting between the Crown Prince and the President of South Africa that Saudi Arabia is joining the BRICS nations. What? Whoa. Saudi Arabia, and it was confirmed not only by the Crown Prince, but also the President of South Africa, that Saudi Arabia will be joining BRICS. Now, if we go back a year or two, we've been seeing things such as Saudi Arabia selling their oil to China for the petro yuan bond. This is a bond that is denominated in yuan that is immediately convertible into gold on the Shanghai Gold Exchange. Want to know how Iran's sidestepped sanctions? They sell their oil to China for the petro yuan bond and immediately convert it into gold on the Shanghai Gold Exchange and take possession. Nigeria is doing the same thing. So you have countries selling oil to another country for something other than dollars. You have other countries protecting Saudi Arabia and Nigeria. You have every one of the OPEC producing countries on the Belt Road Initiative. You have Saudi Arabia, the linchpin of it, who just snubbed Biden, and these idiot congressmen, senators that we have, who have just put a bill in front of the Senate to strip the Patriot missile the Patriot missile defense system from Saudi Arabia and United Arab Emirates. Oh, wait, United Arab Emirates, they just joined the BRICS banks. 6 of the 13 OPEC producing countries are in the BRICS or have said they're joining. And United Arab Emirates, the 7th of the 13th, just joined the BRICS banks, and the rest of them are on the Belt Road Initiative, and the US isn't, and all of these countries are leaving. Countries like Hungary, Turkey, Poland, they're all talking about joining the BRICS, all of them. And these are the countries who have been accumulating gold. So what could happen? well, let's stop right here for a moment and say, what could happen? It seems to me that when you see these countries not only striking unilateral deals, multilateral deals, all of them in currencies other than the US dollar. Saudi Arabia and India just struck a deal together where Saudi Arabia is going to sell oil for rupee. Russia is selling their oil and natural gas for ruble, for rupee, for yuan, for gold, not for dollars. All of these things used to settle in dollars. You're starting to see countries like Turkey said they want to buy Russian energy and not pay in dollars, but to use local currency. All of these countries are moving away from the Western hypocrisy, the Western hegemony, and the sanctions that has freaked all of these countries out thinking, are we next? Now, in and of themselves, these countries could not challenge the dollar. But how about you put them all together? When you put all of these countries who are joining the Brics nations and the Belt Road, you're talking over 85% of human population, countries that are superpowers when you put their economies and their military together. And so the Chinese and the Russians just came out as leading the charge for the Brics nations and publicly said a few things. One, we are issuing a new world reserve currency to challenge the dollar. The finance minister of Russia said the new currency will be a mix of local currencies and commodities. What was reclassified the only tier one asset in the world? Oh yeah, gold. Who's the largest producer of it in the world? Oh yeah, China. Who's the largest accumulator of it? India. What about Russia? They're right up there too. What about South Africa? They sure got a lot of gold too, don't they? How about the fact that they said it will be other commodities too, like oil? Oh yeah, we got Saudi Arabia who just joined. You got natural gas and oil in Russia. Do you see it as the rallying cry of the Western hypocrisy and dominance that brings all of these countries to the table? So much so that China is building a road and a railway between Iraq and Iran, mending fences that are centuries old, broken, because my enemy's enemy is my friend. And you're seeing even hand gestures of reconciliation between Iran and Saudi Arabia and all of these countries. It's standing up to the West that is bringing everyone to the table. It is the pegging of all of these currencies, of all of these commodities, to a new world reserve currency that gives it legitimacy. But how do you do that? What did we say has been going on for the last 4 years, settling all of the contracts on the Belt Road Initiative? What did you have to use to get food or admission to the Winter Olympics in Beijing? Oh yeah, the new digital yuan on your smartphone. For 4 years, they've done over 20 billion in successful trades. Let's call it settlements. Let's call it a beta test. So here's what I believe will happen. All of these countries are joining Brics. All of these countries are on the Belt Road Initiative. 85% of human population. Who isn't? Western Europe, Canada, Japan, the US, they're broke, insolvent countries.
And Australia.
And Australia and all of these other countries are joining together in a commonality, but pegging commodities so that they all have equal footing at the table. How do you show that equal footing? Well, you've got a new blockchain-based, distributed ledger-based, whatever you want to call it, currency, the digital yuan. And it won't be open source, but you will be able to see the veracity and the immutability of all of the commodities that were pegged by all of the governments backing this new currency. And what is a tier one reserve asset again? Who's been accumulating all the gold again? Right. And so my point to you is this: how does it all blow up? How does everything blow up if Powell isn't going to raise rates enough? How about find a villain, right? Here's your villain: Putin, Xi, OPEC, Saudi Arabia. Our stupid senators are saying, pull the military support by them not pumping 2 million barrels more for us into the midterms. It's an open act of aggression. Yet we close our Nord Stream pipeline and disincentivize drilling here in the US, close it down. These idiots are expediting, speeding up the process by which Saudi Arabia says, kiss my you know what. And all it would take all it would take is for Saudi Arabia to stand up arm in arm with Putin and Xi and the rest of their brothers and sisters on the Belt Road Initiative and the Brics nations all growing together and say, thanks for the memories. It's been great. We appreciate how you've protected us for the last 50 years, but we are now joining the Brics. We are being protected by Russia and China and India and all of our other friends who are joining us in this new system where it will be based upon equality of what you bring to the table. What commodities? Why do you think Turkey's been the largest purchaser of gold in the first 7 or 8 months of this year? Because they want to join Brics. They want a seat at the table. And when that happens, all of those dollars, which are already, a lot of these dollars aren't even being used to settle trade anymore. They'll get dumped like that. The dollar gets dumped because you don't need to hold it to buy oil anymore. All around the world, people will dump dollars. When those dollars come home, the dollar collapses. That's pillar number one. And as the dollar comes home with a vengeance, there's way more dollars across the globe than there are here. Interest rates spike to the moon. And what happens? Stocks, bonds, real estate are all inversely correlated to a spike in interest rates. The dollar collapses, interest rates spike, stocks, bonds, and real estate at all-time highs, inversely correlated to a rise in rates. There's your villain. There's your great reset, like that. And it's not far-fetched. And the fact that our senators, these idiots, are saying, pull all military support away, you have just sealed the fate of the US dollar. And it's a matter of time before this happens. And the infrastructure is in place. All of these countries joining together. And when they issue a world reserve currency pegged to commodities, it's over in the blink of an eye. The US dollar will be forsaken. And that is how it happens. And that is why you own gold and silver. It's wealth. It's not an investment, Carrie. And that's the message I've been trying to say for 2 years now, really almost 3. And it's eerie to me. Go back and listen to what I've been saying 2-3 years ago. This is the only thing I've been talking about.
Yeah.
People, the negative remarks I get, he says the same thing, but it keeps happening and it's growing. And now you can see it. I've been saying for almost 2 years that OPEC was going to dump us, that Saudi Arabia was going to dump us. And it's this close. And when it happens, it's a religious experience for everyone in this country who thinks they're wealthy with the stock and bond and real estate portfolio, because they all collapse.
What do you say, Andy? And that was quite frankly almost frightening in its outlook. But let's, if you like, just taking a look at Russia, Ukraine, the war there at the moment, and looking at how the West have banded together and said to Ukraine, we're not going to let anything happen to you. Look at us, look at our muscle power. We're going to push back on Russia. Now, I don't watch mainstream media, but people are telling me that Russia ain't doing so well, and the West seems to be able to, I guess, be the big bully in the playground. Do you think that that's going to change? Like, I guess what I'm saying is, don't they still have enough strength to be able to stop the outcome of what you were just saying?
If they're foolish enough to push us to the brink of World War III, look, I don't think the West is strong enough. And the very fact that they want to pull the Patriot missiles from Saudi Arabia and put them in the Ukraine, I think our politicians are making the most idiotic moves ever. And you're beginning to see, look, if you're seeing these deals between Russia and China and Russia and India, these are countries that are obviously not offended by what's happening in the Ukraine and in Russia. And I am, I said something the other day and I got heat. I think it was probably from someone maybe in the Ukraine who thought I was insensitive. I wasn't trying to be insensitive or pick sides. I just want to try to level the playing field and look at it from a different perspective. And what I said was, imagine that the United States was Russia, and imagine that Mexico was the Ukraine. Just imagine, just change it around a little bit. Yeah. And for whatever reason, we didn't want NATO encroaching upon us and in Mexico. That was the promise we made Mexico, that we would always respect your sovereignty, but you can't have NATO anywhere near us. Okay, fine. What would happen if Russia kicked us out of SWIFT, sanctioned all of our assets, gave $90 billion to Mexico, Stinger missiles and drones, and the intelligence of where to drop the bombs? Isn't that an open act aggression of war?
Yeah.
I mean, it seems that way to me. And so I think there are different ways of looking at it, but I think the rest of the world looks at it that way. All of these Brics countries looks at it that way. Look, in a conventional war where there are no nukes going off, yeah, maybe, maybe they're not up to snuff. But, I don't think that the US has the ability to do it because the US is broke. We're broke. Last year, we paid out in the fiscal year 2021, we paid out 15 trillion in bond payments. 15 trillion in bonds that came in. How do you do that? How the hell do you do that? By issuing more bonds. And it's like using a Visa card to pay off your MasterCard. We are completely and totally broke. We're insolvent. And what's crazy about it is that in 2020, when they did this, or 2021, 2 years ago, on the 2-year Treasury, the interest rates are 0.012. Now they're over 4%.
Yep.
And they've been rolling them forward by issuing short-term maturity bonds. We're broke. We're insolvent. We're spending money that we don't have. And I think we are losing let me put it to you this way. If what I say happens and we lose our singular world reserve status, we have very quickly been severely compromised. And I don't think that the West, being a bully, is going to have the effect that it always has. You have too many countries that are siding with Russia by their actions, maybe not coming out and saying it, but when you have literally 85% of the world still trading with Russia, what does that say for world opinion?
Do you think that Biden it feels like he's almost goading. Recently, he turned around and said, the semiconductor industry, if you work for anybody in China in the chip industry, if you like, and that's not potato chips, you need to give up your US citizenship. You've got to, I mean, that was almost like, here's a shot across the bow, China, we're going to pull everyone out of that. And the second thing that he's talking about is, we're going to go fully renewable energy. We don't need your oil, Saudi Arabia. It's almost like he's throwing bombs left, right, and center to piss people off.
Well, why would Saudi Arabia want to continue that? Why would they want to do anything for us? So when they went there and said, can you pump more oil into the midterm? And they said, no, in fact, we're going to do 2 million barrels a day less. Well, that's an open act of aggression. Well, why the hell would anyone want to do that for us if we're going green and destroying their way of life? 100%. And not only that, look at the ramifications of that. The Chinese officials are stonewalling efforts between Biden and Xi to meet before the G20 meeting in Bali next month. They won't engage with them. No. They're saying, no. And so you're starting to see bitter relationships there as well. We are incentivizing. That's what I was getting at. Was it intended? You have to be an idiot to not think that as the steward of the world reserve currency, it is not our job to say who can and can't use it. That's not that's for world opinion. No, we can't. Once you weaponize the dollar that way, you have just opened up everyone's eyes and said, shit, we better find a back door. What's the back door? All of the countries join together and issue a new currency on a distributed ledger backed by commodities. And all of these countries sit at the table because they're afraid and angered by what's going on with the suppression, the manipulation of the currency, the hypocrisy, the things that the US does, and can just say, we don't like you, so you can't use the currency anymore and you're out of the system. Well, what do you think? Why do you think China has sold for 7 months in a row treasuries, over 120 billion. They don't want to hold our treasuries. Why would they? They're going to get sanctioned if they go after Taiwan. Why would Saudi Arabia want to do anything to help us when they're now being protected by Russia, part of the Belt Road Initiative, being backed by China? You're now joining BRICS. You're being protected by countries who together have a military might that dominate the US and an economy and a GDP that would dominate the West together, backed by currencies that gives commodities that gives everyone equal footing, because gold is now tier one. You have enough gold, you have equal footing at the table. And so that is what I think will greatly ultimately neuter the ability of the West. And yeah, there's going to be pain involved, and maybe globally. I don't know how it all plays out, but you can certainly see the pieces have been put into place to make this move.
I love the fact that you put all those pieces in place. It is quite extraordinary. But as I sit and talk to you today, Andy, third, fourth week of October, whatever it is, in 2022, the US dollar is so strong, and all the other currencies, the yen, the euro, the Aussie dollar, all the other currencies around the world seem to be falling by the wayside. It's Brent Johnson's dollar milkshake theory, but what's going to break? And now you've explained it, but I guess what I'm saying is right now, US dollar seems to be just so dominant. Is it a time when, I don't know, Russia, China, India, the BRICS nations get together and go, here's D-Day, it's 1st of January 2023. Like, is there something going on behind the scenes like that?
Well, it's certainly making it more expensive for foreigners. We're putting a lot of pressure on developing nations. A lot of the world, all of the commodities are in dollars. The dollar is strong against a basket of zombie basket case currencies. It's the cleanest shirt in the dirty hamper. And you know, it's while it goes way up in strength around the globe, its relative strength here at home, what it buys is pathetic. Right. And I think that the strength of the dollar, look, you know, it's appreciating against all of these currencies. It's a reinforced loop where these countries can buy the US dollar, make that appreciation and the interest that is being paid. Well, the more of that this happens, the dollar gets stronger and stronger and stronger. It's gonna put a real damper here in the US. But the thing of it is, there's nothing behind it. And if rates keep rising, everything in this country blows up. So the rates can't keep rising. It's strong, but it's strong against a bunch of currencies and economies that are, look what just happened in the UK. I mean, they're a basket case. The Fed or the Bank of England had to come back in and do QE again to rescue the bond market that was going to implode. That's what's going to happen here. Look what's happening to the Aussie dollar. Look what's happening to the Japanese yen. Canada's a basket case. It doesn't say much. The strength of the dollar measured against a bunch of horse crap doesn't say much. And especially when you try to find value in it here at home. And, you know, it's kind of like the blow off before the crash. And I don't know.
Andy, I could keep talking to you for ages. We're running out of time. I think it's really important. I just want to quickly touch base on what you actually are doing at Miles Franklin. I'm going to get you back on in January, if that's okay with you, because there's so much still to talk about, and this is a very quickly evolving story. But you've been the CEO of Miles Franklin for a while now. Talk to us, our audience, because you are a precious metals company. Why should people be looking at Miles Franklin as a place to get their precious metals?
Well, we've been doing this for 33 years. We've done almost 8 billion in sales without a customer complaint. We're one of only 27 US Mint authorized resellers in the world. We're licensed and bonded in the state of Minnesota in what is a federally non-regulated industry. We have worldwide exclusives with Brics. We got a great reputation, and we're licensed and bonded and US Mint accredited. But I'll tell you something, Carrie, in all the years I have done this, in 33 years, I have never seen product that is being bled down faster. So give me 2 minutes and then I'll let you run. I want to tell everyone what's happening. If you
Yeah.
look right now at the very, 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 very top, since they started recording inventory numbers on the London Metals Exchange, it has never been a lesser stockpile of silver ever in the history of the London Metals Exchange. It is being bled down, massive drawdown. On the COMEX right now, there is only 38 million ounces of silver backing the price setting mechanism of the world. The country of India imported 37 million in August. There's only 38 million right now in bars that could be delivered. The open interest on COMEX right now, the number of contracts versus the number of bars in backing it is 1,150% more paper than there is bars. But you're seeing massive drawdowns. We saw last week in one day, 5% of all the good delivery gold bars were taken off the COMEX in one day. About a month and a half ago, we saw 45% of all the gold COMEX kilo bars for the mini contracts taken off the exchange, delivered in one day, about 25 million ounces of gold in one day. We have seen massive deliveries that are coming off the exchange. And right now on COMEX, the commercial banks who have been suppressing the market appear to be going that long. So you have a dynamic happening where, with the price falling, huge accumulation, and like the central banks were doing, the metals coming off the exchange, there's only 38 million ounces backing the whole game in silver. And it's just, but what is happening on the retail side is that the wholesale market is gone. Every refiner throughout Europe and the US is out of product and won't take new clients. All of the government mints are sold out of product. Premiums are going to the moon, And I've been talking about for the last 2 years that this market will be identified by the inability to source product, and it's happening. Look around you. I don't care if it's Australia, the UK, or the US. Go to precious metals companies' websites. It's disappearing. It's literally disappearing. So if you're thinking about buying precious metals, our new website will be done in about 3 weeks. In the meantime, people can send us, if they're in the United States, we can't unfortunately ship to Australia. But if they're in the US or Canada, we can, and it would be info@milesfranklin.com. Send us an email. We'll answer your questions. We'll send you an inventory sheet. We'll get you the best price in the industry. But I'll tell you something, honest to God, in 33 years, I've never seen it like this. The biggest distributor in the world sends me their price sheet every day. Out of 70 items, 66 or 67 are sold out. There's 1,000-ounce silver bars, there's silver shot, and a few odds and ends. And I've never seen anything like it, ever. So it's getting tough.
Andy, why is this not reflected in the price? Because supply demand, the price seems to be going down right now. I looked at it this morning. It's off today. What the hell? If there's no supply, why is there the price going the other way?
Because the price is being driven down with paper futures contracts. There are more contracts than there are bars backing. We already talked about that. But the commercial banks and the managed money have been suppressing the price of gold and silver for a very long time. And what's interesting about that is that whoever is suppressing the gold and silver has been using it, or whoever is smart enough to realize this, has been using the suppression of the price to run cover for worldwide accumulation like no one has ever seen, where the London Metals Exchange, the COMEX are at their lowest levels ever. And the commercial banks, which have been suppressing the price, have gone long. They're going long in silver futures right now. They are positioning themselves. JP Morgan has amassed 1.1 billion ounces of silver and 45 million ounces of gold. It is the largest physical position of metal the world has ever seen, according to Ted Butler, as the price has been coming down. In other words, it's misdirection. they use all the money that has been created to drive the paper price down. And then when no one's looking because the price isn't doing anything, they are emptying the shelves from the COMEX, the LME, the Shanghai Gold Exchange, Dubai. They've taken out 100 million ounces of silver out of the silver ETF, SLV. The authorized participants have in the last 4 months. 100 million ounces. Well, there's only 38 million backing the whole COMEX. So something's happening. And so from the very top, from all of the exchanges to the ETFs, to the wholesale market, to the retail market, where I'm a US Mint authorized reseller, one of only 27 in the world. And if I sell you Silver Eagles at $16 over the price of silver, I'm the cheapest in the country.
What?
Or if I sell you Gold Eagles at 11.5 or 12% over gold, I'm the cheapest in the country.
Wow.
Something is happening. And
pay attention, ladies and gentlemen. Pay attention.
Yeah,
the most important video that you will watch in a very long time. Andy Schectman, your knowledge is phenomenal. Let's talk again come January if I don't speak to you before Christmas. I know you're working 7 days a week, 18-hour days. Please look after yourself in these crazy times we find ourselves in. And once again, thank you so much for your time. Really appreciate you.
All the best, Carrie. Thanks for having me.